Oh my god, CCIV stock is down. According to the RSI, we are just on the cusp of an integer reading of 30, indicating that the magnitude of the recent price fluctuations for this stock are currently trading in oversold territory. The volume and the MACD have just died down and are surely ready to make a significant swing to the upside, based on the previous patterns I have observed over the last month. This means that now is a perfect time to YOLO my life savings into CCIV call options on margin. So, whether you're an investor or a trader, unless you've been living under a rock for the last 4 months, then you'll probably recognize the ticker CCIV, which stands for Churchill Capital. This is a blank check company that is going to be merging with the electric car manufacturer Lucid Motors. And this was another one of those SPACs that saw a massive rally back in January on hype and news of the merger alone. I mean, just look at this. If you'd gotten in early January and held until mid-February, you would have a 600% ROI. And listen guys, Lucid Motors still has their vehicles in development, so none of their cars are actually on the road yet, which definitely still makes Lucid a speculative play. However, when it comes to electric vehicle companies with the most potential, aside from Tesla, there are two that stand out in my mind, and that would be NIO and Lucid Motors. And if you put a gun to my head and told me that I had to pick either investing in NIO or Lucid, you know what? I would choose Lucid. And I get it, that might sound insane to some people, and maybe it's just my risk tolerance, but I'd like to explain my reasoning on why I think Lucid will have the potential to be a high player in the EV space. I'll get into some recent news with Lucid, including the lawsuits, and I'll discuss if you should buy the stock now or if it's better to wait. Honestly, Lucid has a lot going for it right now. They are aiming to be the pinnacle of luxury in the electric car world. Using superb materials, they're aiming for comfort and luxury first. And if you've ever been inside a Tesla, you'll know that their interiors are okay. I wouldn't consider them anything special by any means, but you know, it gets the job done. With Lucid on the other hand though, they're using materials like walnut and red oak for the trim, while also giving backseat passengers a ton of space in some of their models, incorporating a sweeping console in one of their models that spans through the center of the car, complete with touchpads and lumbar support. And aside from Lucid's interiors, they already have a ton of things going for them. A huge manufacturing facility in Arizona, the Tesla ex-chief engineer at the head, prospects for growth into other geographic regions, and backing by the Saudi investment fund PIF. So this is a pretty solid investment, right? Well, diving further into the CCIV and Lucid merger, when you read titles that
CCIV is now facing around half a dozen lawsuits on how it handled disclosures in the run-up to the much-anticipated merger DA with Lucid Motors,
it begins to dampen your spirits a bit. And I think it's fair to point out that lots of SPACs, more often than not, experience litigation of some sort. However, these class action lawsuits are different in pinpointing identifiable instances where Churchill Capital's disclosures regarding Lucid Motors' ability to deliver fell short. These include the following. Lucid Motors was not prepared to deliver vehicles by spring of 2021. Lucid Motors was projecting a production of 557 vehicles in 2021 instead of the 6,000 vehicles touted in the run-up to the merger with Churchill. As a result of the foregoing, defendants' positive statements about the company's business, operations, and prospects were materially misleading and/or lacked a reasonable basis. Also, when looking through one of the cases, there's now an investigation into whether or not the price of the stock and warrants were artificially inflated during the class period in January and February. So yeah, honestly this whole thing is a mess. And almost all of these complaints allegedly cite the fact that Peter Rawlinson, the CEO of Lucid Motors, stated in media interviews that the company would begin deliveries of their Air model in spring of 2021. Then it wasn't long after this that Bloomberg came out and claimed that the deliveries of the Air EV would be delayed further. And ultimately, it was actually this report that was justified, as Lucid Motors claimed in its merger DA that it would only initiate deliveries in the second half of 2021, not the spring of 2021. So yeah, essentially all the lawyers that are representing shareholders in these cases are claiming that Lucid was being misleading by not disclosing an accurate image of the business and finances during the class period. So it seems like Lucid Motors and Churchill Capital f***ed up on the merger DA, right? Well, in actuality, I think it's a bit more complex than that. as during the class period, neither Churchill or Lucid commented on the rumors of the merger. And even if both parties had been in communication behind closed doors during that period, a lot of the information they wouldn't have been able to legally disclose to the public anyway. And while delaying the vehicle sucks, it was of course a decision for the best. You don't want to bring a crappy product to market if it's not ready. So I stand by this decision for the delay. Though to be honest, I think a lot of people need to learn to underpromise and overdeliver. But hey, no one's perfect. So despite all the riffraff, I don't think anything negative is gonna come between completing the merger. In fact, if anything, I think it's just gonna drive the price down maybe a bit more and create an even better buying opportunity. Lucid has some solid fundamentals, and while I think Tesla will remain the EV king in my lifetime, I think Lucid has a great shot at filling that number 2 position in the EV space. I mean, the vehicle's elegant, it has plenty of horsepower, and it's claiming a range of 500 miles per charge. If Lucid can deliver on all of these promises, then I don't think shareholders have anything to be concerned with. So if you're looking to get into CCIV, I still think the potential is definitely there. I think anything around the $20 range is a buy, and if the stock does continue to keep falling and hits $15, then we're talking. In this range, CCIV would be a solid and definite buy. When I think of the price of this stock now and where it'll most likely be in 5 years, then the answer is a no-brainer to me. And please, this is not financial advice. Just do your own research and come to your own conclusions on this stock. Also, let me know what you think about Lucid in general. I'm always curious to hear what you guys have to say. But yeah, that's the video guys. Thanks as always for watching, and I'll catch you next time.